The Reserve Bank of India added 57 tons of gold to its reserves for the year ended March 2025, bringing the total holdings to about 880 tons. China too has been amassing physical gold in recent times. The US already has the largest stash of gold per country at 8,133 tons. Why do countries hold so much gold purchased through their central banks? And why does it seem so important now? Hello and welcome back to Business Matters of the Hindu with me, K. Bharat Kumar. The Reserve Bank of India purchasing gold is not news. For the calendar year ended December 2024, it purchased 72 tons of gold according to the World Gold Council, and it followed it up with 3.4 tons purchased for the 3 months ended March 2025. That same 3-month period, China added in excess of 12 tons of gold. In dollar value terms, the share of gold in India's total foreign exchange reserves has doubled in 4 years. It increased to about 11.7% by end March from 9.32% in September 2024 and 5.87% as at the end of March 2021, according to a Reuters report citing RBI data. Why are so many central banks adding to their gold reserves? After all, gold is not a productive asset. You cannot do anything with it except hold and hope that the price goes up over time. Now, here are 3 ways in which significant gold holdings by a company can help its economy. First, it allows for currency stability. Second, it acts as a hedge against inflation. And in times of crisis, it could offer liquidity. This is a well-known fact, but is succinctly captured by the Royal Mint, which has been producing currency for the UK for about 1,100 years. Their website says, countries with large gold reserves are usually perceived as more financially stable and more resilient to economic shocks. This, in turn, lends strength to the local currency. Here's how. Take the case of India as an example. If at any point in time foreign investors wanted to exit the country, for example, if they did not have trust or confidence in the economy, then they would want to exchange their rupee holdings for dollars. So they would seek dollars and seek to sell rupees. So Economics 101 tells us when the demand for a commodity goes down, the price would also go down. So the value of the rupee would go down. But if they did not exit and stay invested, that would lend strength to the local currency. This would be especially useful when the currency is facing challenges with other currencies staying strong for whatever other global macroeconomic events. As a corollary, if the US dollar as a global reserve currency loses value, then the value of our own foreign exchange holdings would go down. The value of gold tends to be stable and generally sees the price rise when the US dollar weakens. It hence acts as a hedge against a depreciating dollar, especially if our reserves comprise a combination of foreign currency as well as assets like gold. Next, when a country's currency is depreciating rapidly for various reasons, then the country could seek to mortgage or sell some of its gold holdings and seek to buy back its own currency. Again, economics would tell us when the supply of a certain commodity goes down, then the value of the commodity would go up. And that's what a country would seek to do in these circumstances. In such a scenario, selling or mortgaging gold helps the country avoid selling of dollars in order to buy its own currency and hence prop up local currency value, while at the same time, it gets to avoid a depletion of precious dollar holdings that help sustain our import purchases. 3. Should a country ever come up against a balance of payments crisis like India did in 1991, gold is a wonderful asset to use as collateral and seek loans because then it reassures lenders, international lenders, that the country has the capability to repay its loans. Finally, gold assets help a country reduce its dependence on US dollars. As we said before, a healthy store of a bank's reserves would include denominations in dollars as well as some holdings in gold assets. In recent times, China and Russia have purchased gold for precisely this reason, to depend less on the dollar so that in case of sanctions by the US, their transactions with the rest of the world can continue without being hindered by dollar trade that has been restricted. Now, let's come to inflation. How do significant gold holdings by a country help keep inflation down? Not by direct impact. Here's how the indirect effect takes shape. As earlier mentioned in this episode, significant gold holdings help keep a currency stable. When that is the case for a country, it helps keep import costs low. Let's take the example of purchase of crude oil. To buy 1 barrel of crude oil, say if you need about $60 and then you get $1 for 85 rupees, then there is only so much you would need to spend in rupees. But if the dollar exchange rate worsens to 100 rupees a dollar, then you would need to spend that much more. The depreciation of a currency could happen for a host of reasons, but the last thing one would want is for the currency to depreciate because the investors don't have confidence in that economy. When a currency depreciates, that would drive up the prices of imported goods. And for a country like India that overall imports more than it exports, this contains the danger of spurring inflation. Again, let's take the example of oil because it touches all our lives. India needs a lot of oil to keep its economy chugging along, but also has to import about 85% of its oil requirements. So, a stable currency is key, and gold holdings help there. What do you think? Is the Reserve Bank of India doing the right thing in adding to its gold reserves? Or should it use the money that is spent on gold for any other purpose? Let us know in the comment section below. That brings us to the Did You Know section that we have for you in every episode. Did you know that the total purchase of gold by Indian households in the last 15 years came to just in excess of 12,000 tons? Of this, close to 8,700 tons were as jewelry, and the remaining 3,300 odd tons were as bars and coins. A calculation based on each year's average price of gold and quantity of gold consumed by households indicates approximate gains of rupees 59 lakh crore or a staggering $700 billion at current gold prices. And here's a quiz question for this week. What was the international price of gold in dollars in 1947? And here's the answer to last week's question. There was an error in last week's quiz question from my side, and a few readers actually pointed it out. Thank you. I had said that India approached the IMF once for funding help. If you look at the IMF website, it shows that the number of times India has entered into a funding arrangement, as the IMF calls it, is 7 times. Now, the question was, how many times has Pakistan approached the IMF or the International Monetary Fund for aid? As of March 31st, 2025, the number of funding arrangements Pakistan has had with the fund comes to a count of 25 according to the IMF website. If you enjoyed what you saw in this episode, do not forget to like, share and subscribe. Until we meet again next week, have a lovely time ahead.